Welcome back, dear learners. Before the ad break, we did bad debts and bad debts recovered. Let us see the activity that I have here with me. It reads, W. Waters, a debtor, was declared insolvent. The estate declared a final dividend of 40 cents in the rand, and we received 17,000. The rest of the outstanding debt must be written off as irrecoverable. This has not yet been recorded. Okay, what do they want? We are going to record in the general journal. So we have to understand that the full debt is represented by 100 cents. And the amount we don't know. However, they have paid 40 cents in the rand. And that 40 cents is equal to 17,000. In the general journal, we record the 60 cents. This is what is going to be written off as bad debts. This is our bad debt. And for us to get that, then, we need to say, what I want is 60, the 60 cents. And what I have, your have must have two values, 1 and 2. What I have is 40 multiplied by 17,000. This would then give me 25,500. Therefore, here I have 25.5. 25.5. That becomes my bad debt. When I come to my general journal, I'm going to record my bad debt. So I'll come here and say, account debited is bad debt. And bad debt is an expense, 25,500. And the account to credit is debtors control. The account to credit is debtors control, 25,500. Very important that you understand what were we given here. We're given the 40 cents. That is what we have received. This is what we're given. Okay? A final dividend was paid, 40 cents, and we received. So this is what we received. And whatever we cannot receive becomes our bad debt, which is the 60 cents. Here is the answer. After that, we should be able to record this in the general ledger. In the general ledger, we are having our debtors control here. Remember, an asset, here is a plus and here is a minus. And the balance brought down in the debtors control is 70,000. So here I have my 70,000. And we now have to record the amounts. We are told that we received 17,000. That means I'll come here and I'll say bank CRJ 17,000. But we also wrote off an amount. Remember the 60 cents. So I'll come here, then I'll say bad debts. So remember, this is your general credits. This is your general credits. We're talking of bad debts. And this was in the GJ, and it's 25,500. We have recorded this transaction in full then, when we are in the debtors control account. How then will it affect the bad debts account and bank? Bad debts an expense? Bad debts is an expense. Therefore, it will increase on the debit side. And our bank is an asset, it will also increase on the debit side. So our total for bad debts is 2,600. Here it is. We remember that we wrote off an amount of 25,500 as bad debts. So I'll come here, there it is, 25.5. So I'll come here, then I'll say 25,500 as my bad debt. And for the bank, the balance is 24,000. So I'll come here, 24,000. And when I come here, then I'll say, how much did we receive? We received 17,000. And here it is, 17,000. That is what we received in the bank account. There it is now. Dear learners, we want to see how this adjustment can affect the accounting equation. Okay, let us go. In the accounting equation, remember we have two amounts to record. The amount we received, 17,000, as well as the bad debt amount. Who can tell me how much it was? Thank you. The bad debt amount was 25,500. Let us then start. Which account do we debit? Let us start off with the 17,000. Account debit is going to be bank because we have received. And once we debit bank, my asset is going to be plus 17,000. Which account do we credit? We credit debtors control. Debtors control. And once we credit debtors control, my assets are also going to decrease. So it's minus 17,000. Owner's equity, no effect. Liabilities, no effect. And the next one is going to be the 25,500, which was written off as a bad debt. The account to debit is bad debt. So I debit my bad debt. Remember, bad debts are an expense, so it decreases my owner's equity, minus 25.5. And the account to credit is my debtors control. And once I credit my debtors control, my assets becomes less, minus 25.5. It has no effect on my liabilities. I'm now going to look at bad debts recovered. Bad debts recovered. It says an amount of 6,500 was received on 27 February from T. Mabena, a debtor whose debt was previously written off. The transaction has not yet been recorded. Here is how we record it. In the bank account, remember it's an asset, so it's a plus. I have the balance, 32,000. So I'm coming here and I'm going to say balance brought down 32,000. And an amount of 6,500 has been received. So I'll come here and I'm going to have my bad debts recovered. Bad debts recovered. And this bad debts recovered, we have received it. So it's from the CRJ, 6,500. To complete double entry, I'll come to my bad debts recovered. Remember, this is income then, an income account. So I'll come here and say bank. And I have my 6,500. Very important that you understand this principle. There it is. And then I'm going to look at the effect of this transaction on the accounting equation. I want to see how this 6,500 will affect the accounting equation. Here is my accounting equation template. So when an amount is received, therefore it affects bank. So I will debit my bank because we have received. Once I debit bank, my assets are increasing, plus 6,500. And the account to credit is bad debts recovered. And when I credit bad debts recovered, which is income, my owner's equity will increase, plus 6.5. My liabilities, therefore, will become 0. Dear learners, we will now go for an ad break, and I'll see you shortly.